Good morning, good afternoon, and good evening to all of you. Today, I will discuss about capital structure and leverage. So, it is part of our financial management lecture. Alright. Today, what I will discuss is all about business risk, operating leverage, financial risk, optimal capital structure, and the capital structure theory. So, basically, very important here, no, to discuss, no, about the structures of the capital or capital structure, at the same time the overall leverage. All right, so what do you mean of this capital structure, and what do you mean of the risk involved now in this particular subject? All right, in terms of this one, no, very important is to consider business risk. Now, as you notice, the riskiness inherent in the firm's operations if it uses no debt. So, very important here that you have your riskiness, no, inherent in the firm's operations. Diba? As you notice, tinan mo yun nandyan, no? You have probability, you have your low risk, and also you have your high risk. No? With this one, very important here that if you have a low risk, diba, parang tumataas siya, and the high risk is basically pababa. Bakit ganon, no? Because of the EBIT. Tinan mo yung nasa baba. It is more on the EBIT, the earnings before interest and taxes. The ROIC here is commonly used in terms of the business risk. Okay? Ang ibig sabihin noon ay the ROIC is basically your business risk. Ha? Okay. Kasi mamaya we will have discussions about the ROIC. Okay? Alright? So, what determines the business risk, no? Saan ba nakikita ang business risk, no? Number one, because of the competitions. All right, competitions, uncertainty about demand, sales. So yan, uncertainty about output prices. So there are a lot of business risk, no, that will determine parang yan yung mangyayari, or yan yung effect, or what determines the business risk, no? Product obsolescence, no, the foreign risk exposure, regulatory risk and legal exposure, and also later we will discuss about the operating leverage. So yan. So part din siya ng ating operating leverage. Next, what do you mean of operating leverage, no, and how does it affect your firm's business risk? Now, as you notice in your management accounting, we discuss about operating leverage as the CM. Tama ba? Naalala niyo ba yan? What is the formula? Contribution margin divided by your net income. That's the formula of your operating leverage. But in terms of your in terms of your financial, or in terms of your financial management, ano ibig sabihin nun? It is basically your OL is the use of the fixed cost rather than the variable cost. So, we will focus daw dito in terms of our fixed cost. So, take note, ha, we will focus more on the fixed cost. Alright, what else? Also, if the most costs are fixed, hence do not decline when demand falls, then the firms has a high operating leverage. So, diba, ano yung formula again? CM divided by your net income. So, malamang, nasa gitna doon ay yung tinatawag na fixed cost. Tama ba? Go back to our discussions in our management accounting or cost accounting. It is your cost volume profit analysis. Alright. Kaya nga, it is more on the fixed cost. Okay? Alright. So, effect of operating leverage. Take note of this one. No? The more operating leverage leads to a more business risk, for then a small sales decline causes a big profit to decline, di ba? Tingnan mo, again, more operating leverage meaning it will leads to a business risk. Okay, for then the small sales decline causes the big profit to decline also. Okay, what will happen to the variable cost? Take note of that. Tingnan mo yung graph, no? Tingnan mo yung the break-even point, yung nasa left side nyo, di ba? You have your total cost, so medyo maliit pa. Tingnan mo naman yung nasa right side in terms of the QE. So, meaning, pag tumaas yung ating sales daw, no, the profit also will affect. Okay? It will affect also your profit with this one. Alright. So, meaning, So meaning, in terms of the business risk, now as discussed a while ago, business risk belongs to our return on invested capital. Very important to also to discuss about the ROIC. The ROIC is the return on the invested capital. It measures the after-tax return that the company provides for all its investors. So ROIC does not vary with the changes in your capital structure. Take note. Tingnan mo yung formula niya. No? The formula, okay, take note of the formula class ha. The formula of the ROIC is EBIT, then to be multiplied by 1 minus T. Of course, you have your tax. Tama ba? Yes. And also, you divide it by your total invested capital. Alright, so you divide it by your total invested capital. So how much would be your ROIC? The ROIC here is at 12%. Alright, the return on invested capital is at 12%. Alright. So what is financial leverage, or what do you mean of financial risk naman? Alright. So financial leverage or financial risk is that this is the use of debt and preferred stocks. Yes. It is also use of debt and preferred stock. So financial risk is the additional risk concentrated on the common stockholders as the result of financial leverage. Yes. So very important here to discuss about the financial risk also, 'di ba? Financial risk, operating risk, kasi nga ito ay basically we use this as debt and also as a preferred stocks. Okay? Alright, financial risk is the additional risk concentrated on the common stockholders as a result of your financial leverage. Alright. Okay? So, ano pa kakaiba ng business risk and your financial risk? Sige nga. Ano pa kakaiba ng dalawa? So, business risk depends on the business factors such as competitions, product obsolescence, operating leverage. So, ang dami, no? So, yan yung mga pagkakaiba. Yan yung mga yan yung pagkakaiba ng business risk and financial risk. So, business risk depends on the business factors such as competitions, product obsolescence, and operating leverage. While financial risk naman, it depends only on the types of securities issued. 'Di ba? Ano nga yung formula? If you bumalik nga tayo sa ating financial leverage, when we consider financial risk, 'di ba? EBIT divided by EBIT minus interest charge. Ano yung interest charge doon? 'Di ba? Yung interest charge mo doon ay yan yung debt, 'di ba? And also interest charge and the preferred dividends. Take note ha. Sir, bakit po preferred dividends? 'Di ba? Ang sabi nga per se, preferred stocks daw is part of your is part of your financial, is part of your liability on the part of financial management. Okay. So, an example, no, in this one, an example, illustrating effect on the financial leverage. So, two firms. Halimbawa, you have two firms, no, with the same operating leverage, business risk, and probability distributions of EBIT. Okay? And only differ with respect to their use of debt. Tingnan mo ha, you have firm U and firm L. Si firm U, no debt. Okay? Pero meron siyang 20,000 invested capital and may 40% tax rate. Si firm L, tinan mo, may utang siya. May 12% pa siyang utang na interest. Then, with the $10,000 debt, you have a 12% debt. And also, you have 20,000 invested capital and 40% tax rate. Yan. So, ano pa kakaiba niya? Alright, so yan. Okay? So, take note of the unleverage. Alright. So, economy, if you have BAD, you have 0.25, you have 0.50, and you have 0.25. So, EBIT, of course, $2,000, $3,000, and $4,000. And you have also the interest. And you have EBT, okay? And to be multiplied by the 40%. Of course, your net income here is 1.2, 1.8, and also you have the 2.4. Okay, take note of the take note of this one, no, the unleverage. Alright. So, in terms of the leverage, no, it is basically as the firm, no. Tingnan mo yung firm U. Okay? Same as firm U. So, if you have BUD, 0.25, 0.50, 0.25, tinan mo yung EBIT niya. 2,000, 3,000, 4,000. Alright, kasi nga kanina, as you notice, it is basically key firm U as part of the unleveraged. Tinan mo yung net income niya ha, 1.2, 1.8, and also 2.4. Tinan mo sa kanyang L. So, same lang naman yan, no? Pero, because of the interest, take note, because you will pay for that, di ba? Tinan mo yung interest na 1.2. Kanina, mayroon bang 1.2? Wala, di ba? Meaning, ano yung difference nila sa interest? Alright. So, meaning, sa firm L na leverage of 480, 1080, and 1680, meaning, it will affect your net income. Yes. Pero, ang maganda naman dito is, yung babayaran mong tax mas maliit, 'di ba? Tingnan mo yung firm L. Magkano babayaran mo tax? 320, 720, 1120. Kanina. Magkano binayaran mong tax? Sorry. Magkano binayaran mong tax? 320, 720, sorry. Para tayo sa unleveraged. Yan, tingnan mo yung binayaran ng firm U. 800, 1.2. Mas malaki. Of course, because of the interest. Okay, ha? So, meaning, interest also will have a significant role naman, no, in terms of the payment of taxes. Kaya nga, di ba, sabi ko sa inyo last time, na, if you will consider liability, it will be deducted to your EBIT, and of course, you will pay less tax. Di ba, kanina, mas maganda. Tinan mo kay firm L, 320, 720, 1120, mas maliit, compare kay U na unleveraged na 800. Okay, go to the tax ha. 1.2 and 1.6. So, ganun lang ha. Yan yung pagkakaiba nila if you have a leverage or you have unleveraged. Alright. So, ratio comparison naman between the leverage and the unleveraged. Okay, firm U and firm L. Alright, tingnan mo ha. ROIC, the business risk, no? Or return on invested capital. Alright. So, you have 6%, 9. Walang pagkakaiba sa ROIC. But in terms of the ROE, return on equity, mas maganda si firm U. Okay. Alright, si unleveraged, no? Okay, 6%, 4, and 12. Of course, sa common sense, you will not consider time interest earned, diba, kay firm U? Kasi wala ka tayong interest. Wala ka tayong utang. Kay firm L naman, you have 1.7, 2.5, and 3.3. Okay? Hopefully, alam nyo na yan, ha? We discussed na yan about in our discussion of FS analysis, diba? Alright. So, risk and return for leverage and unleverage. So, expected values, firm U, 9%, 9%, ROE, 9, 10.8, then times interest. Ito yung kanina, no? And 2.5. Risk measures. Alright. Walang problema sa ROIC kasi same lang yung formula niya kasi it will not affect the interest. While the ROE, yan, so 2.12 and 4.24, of course, sa times interest earned, you have 0.6. So, meaning, we just compare the leveraged and unleveraged firm. Alright. My question sa inyo, class, ano mas maganda? You have a liability or you have no liability? Alright. It would depends, diba? Of course, if you have liability, as long as you have the capacity to pay, no? Capability to pay, okay lang yan. Kasi nga, magbabayad ka naman ng less tax. Pero kung wala kang pambayad, diba? Huwag ka na manghutang. Papatong-patong pa yung interest natin dyan. Okay? Alright. So, the effect of leverage on the profitability and debt coverage. Now, for leverage, to raise expected ROE, must have ROIC, which is greater than your D or RD or 1 minus TY. Ano to? RD is return on debt to how? Okay? 1 minus T meaning tax Y. If the RD, 1 minus T, is greater than the ROIC, then after-tax interest expense will be higher than the after-tax operating income. Yes, di ba? Ito ba yung natandaan pa? When we are in the cost of capital? Hopefully, yes. Alright. Di ba? We multiply it by the tax and then, pag malaki yung ating return on 1 minus T, kasi di ba, ito yung ating cost of capital. Hopefully, naalala pa to class, ha? Alright. After the tax interest expense will be higher than the after-tax operating income produced by a debt finance asset. So, leverage will depress as the income. Okay? So, as debt increases, okay, habang tumataas na yung utang, times interest earned decreases because EBIT is unaffected by debt. But interest expense increases. Diba? So, diba, ano yung formula ng times interest earned? EBIT divided by the interest expense. Kung tumataas daw ang ating utang, okay, times interest earned ay bababa. Because the EBIT is unaffected by debt, but interest expense will increase. Kaya nga, diba, risky. Pag bumababa ang ating times interest earned, common sense lang. Pag lumalaki ang utang natin, may possibilidad na hindi tayo makakapagbayad ng utang. Common sense lang to, ha? Alright. Hopefully, magigets nyo. Or nagigets nyo. Alright. So we are done, no? We are done with our leverage, no? So, we are finished with the leverage. Next naman is your optimal capital structure. Alright. So, what do you mean of optimal capital structure? So, capital structure or mix of debt or preferred and common equity at which P0 is maximized. So, there's a trade-off higher ROE and the EPS, no, against higher risk. Yes, the tax-related benefits of the leverage are exactly offset by the debt risk-related cost. Yes. Okay? The target capital structure is the mix of debt and preferred and common. Okay? Ngayon class, hindi na siya tinatawag na preference shares na. Common stock is now called ordinary shares with which the firm intends to raise capital. Okay, sir, parang familiar yan. Sir, yan ba yung discuss natin sa cost of capital? Yes. Yan yung sa cost of capital natin in our discussion. Alright. So, why do bonds, ratings and cost of debt depends upon the amount of debt borrowed? Tingnan niyo bakit? As the firm borrows more money, the firm increases its financial risk. Common sense lang yan, class, ha? 'Di ba? Pag nangungutang ka, may posibilidad na hindi ka makakapagbayad. Yes. Causing the firm's bond relating to decrease and its cost of debt to increase. Alright, so yan ya. Very important is that, no? As the firm borrows more money, the firm increases its financial risk, causing the firm's bond rating to decrease and its cost of debt to increase. Okay. Alright. So, sequence of the events in recapitalization. So, we are done with we are now with recapitalization. So, the firm announces its recapitalization. Hindi ibig sabihin, palugi na, ha? Ano lang, recapitalize lang. Pwedeng tumaas, pwedeng bumaba. New debt is issued, so we will issue a debt. Proceeds are used to repurchase stocks, yes. So, proceeds are used to repurchase stocks. Okay? The number of shares repurchase is equal to the amount of debt issued divided by price per share. Alright, yan ha. So, yan yung mga sequence natin in terms of recapitalization. Alright, sorry. Nasobrahan. Alright, yan. So, cost of debt at different debt ratios. So, again, amount borrowed, you have 0. Debt, of course, 0 yung lahat. No? Pero pag nanguna ka ng 250, as you notice, debt to capital ratio, you have 0.125. So, as time goes by, pag nangungutang ka, tumataas ang ating debt to capital ratio. Common sense. Okay. How about your debt to equity ratio? Common sense din. 0.153, 0.33, tumataas din. But tingnan mo yung bond rating. Okay. Ano ba mas mataas? Diba? AA. Okay. 250, AA, A, BBB, BBB. And also you have RD. Alright. RD naman is the return, no, on your debt or risk or cost of debt. 8.0, 9.0, 11.5 or 15.0. Alright. Paano yan, sir? Alright. Analyze the recapitalizations of the various level and determine the EPS. What if you have 0? Alright, so EBIT, yun yung kanina, ha? EBIT minus RD, 1 minus D. So, meaning 400,000 divided by 80,000. Your EPS here is at 3 pesos. Okay? Please take note of the 3 pesos, ha? Alright. Okay. Determine the EPS and tie at a different level of debt. Let's say debt is 250 and the RD is 8%. So, shares repurchase, meaning na-repurchase mo yung 10,000 shares. Alright. Meaning, treasury shares, diba? Repurchase. So, EBIT, same pa din, no? Then, we minus it with our 0.08 because the 0.08 here is the RD, meaning the rate. Alright. Minus the 0.08, and also you have the 250,000. We will multiply it by the tax. Alright. So, we will multiply it by the tax. So, then, divided by 80 minus 10. So, the answer here is at 3.26. Alright. Next naman is, of course, you will compute for the times interest earned. So, you have EBIT divided by your interest expense. Alright. So, you have your times interest earned. The times interest earned here is at 20 times. Alright. So, meaning the times interest earned here is 20. Alright. Again, the EPS here, no? 400,000 minus 0.08 here, no? Is the RD. And then the 250. So, 0.08 muna times 250. Alright. Then, minus 400 times 0.6. Okay? So, you divide it by 80,000 minus 10. No? Ano yung 0.08? It is the interest, diba? Okay? So, meaning, 8% and then the RD of 250. Just multiply it muna. 250 by 0.08. Then, we minus it by 400 times 0.06 divided by 80, 10, you have 3.26. Okay? Of course, the times interest earned, alright, the EBIT divided by interest. So, you have 20 times. Alright. Determining naman the EPS, ito ay more on formula, diba? And the times interest earned at a different level. What if you have 500,000 and you have 9%? So, 500,000 divided by 25 is equals to 20,000. Alright, so EBIT, diba? So, meaning 400,000 minus 0.09 times 500 muna. Then, we minus it by the 400. Parang kanina, no? Same as a while ago. Alright. So, after that, we multiply it by 0.06. You divide it by 60. So, how much would be your EPS? The EPS here is at 3.55. And the times interest earned here is at 8.9x. As you notice, ano ba nangyayari? Pag tumataas ang ating, diba? Pag tumataas yung ating utang, what happened to the times interest earned? Bumababa. Wala ka ng capacity to pay. Yes, diba? 20 times kanina. Ngayon naman ay naging 8.9x. Yan. Alright. Okay. Next. Tumataas ba? As time goes by, tumataas, diba? 750 na and 11.5. Same formula kanina, ha? As you notice pala sa EPS, sorry. EPS pala, hindi ko na, okay. 3.77 here. Ito ay 3.55. Tumataas ang ating EPS, diba? Okay. Tumataas yung ating EPS. Okay pala. Habang tumataas ang ating utang, ang tumataas yung interest. Pero, the times interest earned ay bumababa. Sorry. The times interest earned here ay bumababa, no? Ikaw ay magiging ng 4.6%. Alright, next naman. Okay. Tapos na pala. Then may isa pa. Take me one more. Yan. So, if you have 1 million and you have 15%, same formula pa din. EBIT minus RD, no? So, times 0.6. Okay? Alright. So, as time goes by, because, take note class, ha? Because also it also reflect kasi in terms of the shares repurchase, no? Yan. So EPS natin tumataas because of the repurchase. Yun yung effect niya kung bakit tumataas. While times interest earned, bakit bumababa? Kasi tumataas ang ating debt. Okay? Wag malito class, ha? Alright. Don't be confused about this one. Okay? Alright. So meaning, what effect does the more debt have on the firm cost of equity? So, if the level of debt increases, the firm's risk increases. Common sense class. Pag tumataas ang ating utang, risky tayo na hindi makapagbayad ng utang. Tama ba? Yes. Alright. We have already observed that the increase in the cost of debt. As time goes by, again, tumataas yung ating utang, tumataas ang ating financial risk. However, the risk of the firm's equity also increases, resulting in the higher RS. So, yan. So, habang the risk of the firm's equity also increases, resulting in the higher RS. Alright. Yan. So, we are now here in terms of Hamada equation. Lumalabas sa CPA board exam, ha? Because in Hamada equation, we will be computing for our beta. Okay? Ano nga yung beta, class? Go back to the CAPM model, ha? Capital Asset Pricing Model. The beta here is basically what? Diba? To measure your risk. In terms of systematic risk only, not unsystematic. Because, bakit? Systematic risk is you cannot control. Diba? That's why, it is only for your systematic risk. Okay? Because the increased use of debt, alright, causes both the cost of debt and equity to increase. Okay? We need to estimate the new cost of debt. Yes. Okay? So, the Hamada equation attempts to quantify the increase of equity due to financial leverage. Alright. It uses the firm's leverage, beta, which represents the firm's business risk as if it had no debt. So, yan yung ibig sabihin ng ating tinatawag na Hamada equations. We need to consider what? The beta. Alright. We need to consider the beta. Alright. Yan. Alright. So, how do we compute for this one? How do we compute for the Hamada? Alright. So, in terms of the Hamada equations, diba? Very important is the formula of BL, meaning you compute for the BL, for the beta, is equals to BU. 1 plus 1 minus T, then we multiply it by debt and equity, yan, ha? Alright. Suppose that you have a risk-free rate of 6%. So, it is the market premium or market risk premium. The unleveraged beta of the firm is 1.0. We were previously told that we invested capital of 2 million. So, ito yun, ha. Ito na yun in computing for our Hamada equation. So, calculating for the leverage beta and the cost of equity. What if your debt is at 2.50? How do you compute for the BL? So, meaning, 1.10, again, ano nga yung 1.10? It is basically your BU, alright? Okay, BU, or the beta unleveraged, alright? So, 1.10, okay, to be multiplied by 1 plus the 0.06. Ano yung 0.06? Okay, we go back again to the formula. It is basically your tax. Yan. Tapos, yung, ano naman yung 250? Utang mo yan. Ano yung 750? 750 here, 1,750, sorry, is your equity. Okay, magkano yung beta natin? Beta, ha? We will compute for the beta, 1.0857. And after that, naalala pa ba to, class? Sana naalala pa to, ha? Ano to? CAPM model. Or, what? Anong ibig sabihin nun? CAPM model or your, what? CAPM model or your SML, no? Security Market Line. So, RF plus RM minus RF and BL. So, makano yung ating risk or makano yung ating return on equity? 12.51. So, hopefully, naalala pa yan, ha? Hopefully, naalala pa yan. Alright, about the 12.51. Alright. Alright, next table for calculating the leverage beta and the cost of equity. So, ito yung kanina. So, gagawin natin, di ba? Ito yung kanina, di ba? I-notice pa. So, what if you have RS sa 12, 12.51, 13.20, 15.16, and 15.60. Alright, so, yan yung kanina, no? So, nandun pala siya galing. Yes, and you have leverage beta. Yan, 1, 1.09, 1.20, 1.36, 1.60. And debt to equity. Okay? So, hopefully, naiintindihan, class, ha? Hopefully, naiintindihan. Alright. Next, how do we find naman optimal capital structure. How do we find that? So we can find that in terms of WACC. The firm's optimal capital structure can be determined in two ways. You will minimize the WACC and to maximize the stock prices. Yes. Ayan. So, both methods yield the same results. Yes. Alright. We discussed already the WACC, ha? Hopefully yan ay naintindihan na, ha? Alright. So, meaning, table for calculating your leverage betas and cost of equity. So, ito lang yun, no? So, as you notice, the WACC here is at 11.25 at 500. Alright. Paano kinocompute yan? Gaya kanina, we will compute for the Hamada equations using the computing for the beta, and after that is we compute that using naman in terms of our risk-free rate. Alright, so yan yung ating mga formula. Okay, yan yung mga formula in terms of computing for our beta and also for our Hamada equations of beta of unleveraged and beta of leverage. Alright. So, stock price with zero growth. Alright, so ito naman yung formula ng stock price. So, P0 is equals, diba? Naalala pa ba to? Hopefully, yes, ha? So, D1 minus RSG, diba? We discussed this in the stock valuation. Is equals to EPS or RS or DPS or RS. Huh? If all earnings are paid out of dividends, EG is equal to 0. So, meaning EPS is equals to DPS. Dividend per share to, ha? Yan. So, EPS will equal to the dividend per share. To find the expected stock price, we must find the appropriate R at each level of debt. Sorry, not dividend, debt per share. I stand corrected now. Should be debt per share. Okay? Alright, not dividend. We are not in the dividend, sorry. Alright, determine the stock price, maximizing your capital structure. So, meaning, as time goes by, habang tumataas yung ating borrowed funds, tumataas yung ating debt per share. Common sense, di ba? Alright. And also, you have return on S, no? And also the PO or the proceeds. Alright. So, as you notice, para lahat sila ay vary proportionately and directly. Alright. So, what debt ratio maximizes the EPS? Since, di ba, kanina sabi natin para magkaparehas sila. Alright. So, paano? Maximum EPS is equals to 3.90 at debt of 1 million and the debt to capitalization is 50%. Remember, DPS will equal to your EPS, yes, because payout is 100%. Risk is too high at debt. Diba? Napaka-risky nito, class, ha? Napaka-risky nito, no? If you have this one. Risk is too high at the debt or capitalization of 50%. Alright. So, what do you mean naman of campus daily optimal capital structure? Okay. So may mga ibang term dito, no? All right. So campus daily capital structure is P0 is to maximize 26.89 at okay. Dividend or debt capitalization is 500,000 divided by 2 million. You have 25%. So optimal capital is you have 25%. So, EPS is to be maximized at 50%. No? But the primary interest is the stock price, not the EPS. So, the example shows that we can push up EPS by using more debt, but the risk resulting from the increased leverage more than to offset the benefits of the higher EPS. Alright. Hopefully, naiintindihan class. Medyo technical siya, pero alam ko kayang-kaya niyong intindihan. Kayo pa. Alright. Sorry, pati doble. Sorry, mali. Next naman, no? What if there are more or less business risk than originally estimated? How would the analysis be affected? So, if there were higher business risk, no, then the probability of financing distress would be greater at any level. Yes, and the optimal structures would be one that had less debt. Yes, kasi nga, yun nga, very important also to consider the business risk involved or the estimated also. No? However, lower business risk would lead to an optimal capital structures with more debt. Alright, yan ha. Alright, what would these factors affect naman the target capital structure. Of course, kung yung ating benta, no? Lalo ngayon because of pandemic, 'di ba? The sales stability, if you have high operating leverage, 'di ba? What would be the effect? Of course, the high leverage, no? The increased corporate rate, increase in the personal tax rate, increase in bankruptcy. As you notice, flexibility, firm's growth rate. So all of this will affect, of course, your capital structure. Stability of OL, no, corporate tax, 'di ba? Kaya medyo ano ngayon, medyo mahirap, no? Especially in terms of the of targeting, no, pinaka maximum in terms of your capital structure, 'di ba? All right. So, we have also Modigliani-Miller relevance theory. So, value of the stocks as you notice here, no? And you have also leverage capital. So, tumataas yung ating value or leverage, tumataas yung ating tumataas yung ating value, tumataas yung ating leverage or capital. Okay? So, anong ibig sabihin ni MM, relevance theory? The graph shows that the MM tax benefit versus bankruptcy and cost theory. Yun nga, logical, but does not tell full the story about capital structure. Yes. Main problem of this one is the assumes investors have the same information as the managers. Yes. Ano lang to ha? More on mga theoretical lang. How about naman incorporating signaling effect? Okay? Anong ibig sabihin nun? Signaling theory suggests that the firms should use less debt than MM suggests. Diba? Ako din, gusto ko mas maliit yung aking utang. Diba? The unused debt capacity helps avoid stock sales, which depress stock price because of signaling effect. Alright, yes. So, ano tayo? Mga more on, we are more on the theoretical, no? What are signaling effect capital structure? Assumptions? Managers have better information about the firm's long run value than outside investors, yes. Alright? Managers act in the best interest, of course, diba? Of the current stockholders, yes. What can managers be expected to do? Issue stock price, no? If they think it is overvalued, yes. Issue stock, no? If they think issue debt, if they think stock is undervalued, yes, di ba? Di ba? Take note ha, it is a parang ano to, parang diskarte na lang. Pag naisip mo na overvalued ka, sige, issue mo na siya. Alright, yan. Okay? As the result, investors view stock offering negatively. So, managers think stock is overvalued. Alright, sige. So, in terms of conclusions, no, with this capital structure, very important is need to make calculations as we did, no, but should also recognize inputs are the guess estimates. Yes. As a result, no, of emphasized numbers, capital structure decisions have a large judgmental content, no. We end up with the capital structures varying widely among firms, even similar ones in the same industry. Alright, so very important is the use of capital structure, no? Because of this one, diba? Because we need to have these informations more, diba? To recognize more about maximizing the capital structure, diba? And also, yes, all of this are all estimates, pero mas okay if because of these numbers, you can be able to know ano ba yung tamang earnings per share, or ano ba yung pag tumaas ba ang ating utang, we have ba the capability to pay, 'di ba? Because as we maximize your capital structure, 'di ba? It will vary naman, no? It will vary in terms of the company. Pero the main problem here, or the main concern here is, yes, you can employ more equity, more debt, as long as you have the capacity to pay. Or if you want naman to accept more investors, okay lang naman yan, as long as you have more cash, you have enough cash to pay for dividends, no? To pay for parang return to your stockholders. Alright, so again, thank you very much for this one, and hopefully you learned, no? You learned more about the optimal capital structure, the leverage, the Hamada equation, and also computing for the beta, no, and using for the CAPM model. Again, thank you very much and see you all. Bye bye.